Wow, this is crazy. I mean, look at this chart. Everyone is constantly talking about the massive AI chip makers, right? But Astera Labs just posted an explosive 76.1% stock rally in May 2026 alone. The market is absolutely fixated on this semiconductor connectivity company, and the debate over its valuation is getting incredibly intense. Welcome to today's Explainer, where we're going to break down exactly what's happening here. I'm your host, and joining me to cut through the noise is our Chief Investment Analyst.
Thank you for having me. And yes, Astera Labs isn't just riding a generic AI wave. If you look at the data here, they are sitting at a very specific critical choke point in the physical build-out of modern data centers. The numbers we are seeing reflect a fundamental structural shift in how AI hardware is actually wired together.
Okay, wait a minute, Doctor. Let me play devil's advocate for a second. What does that have to do with our stock accounts? Is this stock momentum fundamentally real, or are we just looking at another temporary AI bubble where literally any company with AI in their press release sees their valuation shoot to the moon? That is exactly the question we need to answer today, and we will do it strictly based on the facts. We are looking directly at their SEC filings, their product deployment data, and the macroeconomic spending environment. There is no room for speculation here. The financials indicate a very real growing business, but as the data will show, there are also very real structural risks regarding their reliance on a few massive cloud providers. All right, let's dive right into this. On the agenda for today's Explainer, we're covering 4 crucial stages. First, the AI connectivity boom. Second, Q1 financials, under the hood. Third, Astera's billion-dollar moat. And finally, 3 future investment scenarios. Let's move straight into stage 1, the AI connectivity boom. We really need to understand what's actually driving these massive news headlines right now. If you analyze the recent market activity, it is clearly not just retail enthusiasm. There's heavy institutional attention being driven by 3 distinct verifiable catalysts that all materialized in the first half of 2026. First, their Q1 2026 earnings were an absolute blowout. Second, they officially launched and began shipping the Scorpio X-Series 320-lane smart fabric switch, targeting a multi-billion-dollar market. And third, they announced a major operational expansion in Taiwan combined with their inclusion in the Nasdaq 100 index.
Oh my God, really? The Nasdaq 100 already? No way! So that basically means they're getting passive fund buying pressure on top of active investors jumping in on their new product launches? But before we get into the heavy math here, for those unfamiliar with the company, what exactly are they selling? Can you give a simple analogy?
Let me break this down for you. Astera Labs provides purpose-built semiconductor connectivity solutions. Think of the most advanced AI GPUs as high-performance sports cars. On their own, they are incredibly fast, but if you put them on a dirt road or a single-lane street, they get stuck in traffic. Astera Labs builds the multi-lane, speed-limitless highways, utilizing technologies like PCIe, CXL, and Ethernet that allow thousands of these sports cars to communicate and share memory without bottlenecks. Okay, that makes perfect sense. They don't make the compute chips themselves, they make the plumbing that stops the chips from getting jammed up. Now that we know what they actually do, let's shift to stage 2, Q1 financials under the hood. And remember, Doctor, no boring lists of numbers. I want to know exactly what these financials are proving about their underlying business model. Understood. We will look strictly at the condensed, consolidated statements from their Q1 2026 report to see how this highway building business translates to the balance sheet. The headline figure is $308.4 million in revenue for the first quarter of 2026. Now, context is everything here. That is a 14% sequential increase from the previous quarter, but more importantly, it is a staggering 93% jump year over year compared to Q1 2025.
Wow, they nearly doubled their revenue in 12 months? What's driving that specific spike?
According to their CEO, Jitendra Mohan, this was driven primarily by robust demand for their PCI 6 portfolio. The industry is currently building out massive AI infrastructure, and the deployment data proves that hyperscalers are actively purchasing Astera's Aries and Scorpio switch portfolios to handle it. However, revenue isn't the most important part of this table. Let's evaluate the operational leverage. If you look at the data here, while revenue grew 93%, their cost of revenue only went from $40 million to $73 million. This resulted in a GAAP gross margin of 76.3%. But the most critical metric is GAAP operating income. It jumped from roughly $11.2 million in Q1 2025 to $61.8 million in Q1 2026. Hold on, Doctor. That's a 448% increase in operating profit. What does that actually mean for the business on a structural level? It's proven by the numbers. They have massive operational leverage. They can scale their revenue without proportionally increasing their fixed costs. Even while they aggressively increased research and development spending from $64.5 million to $125.6 million to build their economic moat, their operating margins still expanded dramatically. So what you just said basically means their profit engine is scaling way faster than their expenses, proving they have serious pricing power in this market. And this chart brilliantly illustrates that huge growth. Precisely. It is a highly profitable growth phase, directly correlated to the capital expenditures of the major cloud providers. But here's where I have to step in as the viewer's spokesperson. Because if they're making such great money and the growth is over 90%, why is the stock experiencing such crazy volatility? And more importantly, why is the market going wild with reports of heavy insider selling? How does that actually impact our portfolios?
That is a very rational concern. According to analysis by Simply Wall Street, the market sentiment is strong but filled with tension. While firms like RBC Capital are positive, analysts at Northland have specifically flagged valuation concerns and a cautious long-term outlook on data center spending. Furthermore, the SEC filings show significant insider selling over the past 3 months. When you combine high valuation multiples with insider selling, it mathematically implies that current market expectations are already incredibly demanding. Any slight miss in future earnings could trigger a severe correction.
Okay, so the stakes are absolutely crucial here. Let's move to stage 3, Astera's billion-dollar moat. To evaluate their economic moat, we have to look at the technological shift happening in data centers right now. Historically, the individual server was the basic unit of computing. But as AI models have grown to multi-trillion parameters, the AI has outgrown the individual server. Now, the entire server rack is the new unit of compute. Astrolab's moat is built on providing the fabric, specifically their Scorpio Smart Fabric switches, that unifies diverse components across the whole rack into one cohesive system. Right, so instead of plugging individual computers together, they're basically turning a whole warehouse of chips into one giant unified brain. That is an accurate assessment. And their irreplaceable weapon inside this switch is a hardware engine called Hypercast. The product specifications show it is designed specifically for modern AI workloads, addressing a severe bottleneck caused by mixture of experts or MOE architectures. Wait, that's way too complicated. What in the world is mixture of experts dynamic routing, and why should investors even care about that? I will keep it strictly to the facts. In modern AI, when you ask the model a query, the data is dynamically routed only to a specific subset of expert GPUs, rather than all of them. This creates a massive, constant need to instantly multicast data across the network. Traditional switches are simply too slow for this and cause latency. Hypercast is a hardware mechanism that handles this specific data replication instantly, reducing collective operation latency by at least 50% according to their internal benchmarking. If you examine the competitive landscape, legacy networks require multi-switch, multi-hop setups. The data has to jump through several hoops to get to its destination. Astera's new Scorpio X Series 320 lane switch allows a single-hop, high-radix fabric that supports up to 80 GPUs per switch. Wow, 80 GPUs on a single hop? That's insane. Yes, and it's proven by the numbers. It uses memory semantic connectivity, meaning accelerators access shared fabric resources using native load/store operations instead of clunky software messaging. This specific technological advantage is why they are targeting a merchant scale-up switch market that is projected to reach $20 billion by 2030. So to put it simply, if the network is too slow, it literally doesn't matter how fast the NVIDIA or AMD chips are. To quote their CEO right here, the infrastructure has to keep pace with the accelerators.
Exactly. The bottleneck is shifting off the GPU and into the fabric that connects them. By maintaining open standards like UALink and PCE, Astera provides a viable alternative to closed proprietary ecosystems.
But come on, nothing is bulletproof in this sector. What are the fatal weaknesses here? We must remain cold-headed about the risks. Based on the Simply Wall Street analysis, the primary risk is hyperscaler concentration. Astera depends heavily on massive cloud providers. If companies like Amazon, Microsoft, or Google decide to exclusively develop their own in-house interconnect solutions, Astera's market share would plummet. Secondly, any macroeconomic slowdown in AI data center spending will hit them directly. And finally, as we discussed, the high valuation leaves zero room for error. The share price is incredibly volatile if growth slows even slightly. That leads us perfectly into our final stage, Stage 4, 3 future investment scenarios. Wow, so if big tech just decides to build their own highways, Astera gets totally boxed out. Give us the actual odds here. What are the triggers for the bear, base, and bull cases?
Let's systematically walk through each, starting with the worst-case situation. We are basing these entirely on the current deployment data, official guidance, and market TAM projections.
The bear case is triggered if the risks we just outlined materialize. If AI data center spending cools off due to a lack of near-term ROI for the hyperscalers, capital expenditures will drop. Furthermore, if the ecosystem rejects open standards like Ulink and pivots entirely to closed proprietary interconnects built in-house by the tech giants, Astera's total addressable market shrinks. Under these preconditions, the high valuation multiples would aggressively compress, leading to a severe correction in the stock price regardless of their current profitability.
Got it. So if the AI gold rush pauses, the guys selling the pickaxes and shovels take a massive hit.
Correct. Now, the base case, which is the most statistically likely near-term future, is grounded in the company's official Q2 2026 financial outlook. This scenario assumes continued strength in their PCIe 6 portfolio. The company officially guides for revenue between $355 million and $365 million next quarter, while maintaining a GAAP gross margin of approximately 73%. In this scenario, the stock price normalizes as earnings steadily grow into the current valuation, assuming no massive macroeconomic shocks.
So just steady execution of the current pipeline. They just keep laying down the highways as ordered.
Finally, the bull case. This scenario relies on the successful, widespread ecosystem adoption of their new Scorpio X series and memory semantic fabrics. If hardware-accelerated engines like Hypercast become the industry standard for managing mixture of experts workloads, Astera Labs is positioned to capture the majority of that $20 billion scale-up switch market by 2030. If the data center completely shifts away from direct-attached topologies to Astera's switched architectures, the revenue scaling we saw in Q1 is just the beginning. In other words, if their open standard vision defeats the closed ecosystems, they become the undisputed connectivity king of the AI era. You know, that Benjamin Graham quote perfectly fits Astera Labs' current situation. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Right now, the hype and momentum are voting Astera Labs up based on explosive Q1 growth and massive AI market projections. But over the long run, the weighing machine will measure whether they can defend their moat against hyperscalers building in-house and whether that $20 billion market actually materializes. Thank you to our analysts for breaking down the data, and thank you all for watching today's Explainer. Your subscriptions, likes, and supportive comments are a huge encouragement for our production. Let us know down below, do you think Astera Labs is the real deal or just an AI bubble? See you next time.